What's up, everyone? Today I will be discussing something very specific, and that's going to be how one can determine what is a discount array, what is a premium array, and how one can determine the actual daily bias for that day during London Open Kill Zone and New York Open Kill Zone, right? So it comes to basically two things. Okay, it comes to two basic things. Number one, your higher time frame discount and premium array, and number two, your central bank dealing range on the lower time frames. Okay, so since mostly everyone day trades rather than short term trade or swing trade, I will be looking at this from a 15-minute and 4-hour perspective, right? So our higher time frame is going to be the 4-hour time frame, and our execution time frame is going to be the 15-minute time frame. Okay, and now we're going to be using the concepts of the central bank dealing range and your premium and discount array on the higher time frame. In this case, the 4-hour time frame, right? So if you just go to a random week, so let's just go to a random week on the 4-hour time frame, something that's obvious. Let's see, maybe this one right here. Let's go replay mode and come around here, right? So yeah, over here. Okay, so now what can you see over here? So number one, you can see, and listen carefully, right? You can see that price right over here in this drop. Where is it reacting off of? This bullish order block, right? So we have this bullish order block plus this fair value gap, right? So when we have a bullish order block plus a fair value gap on a high time frame, one knows that if it is indeed significant, we are going to get a brand new major price swing. And this price swing was initially 170 pips, which is a lot. Okay, and I think I did catch this move with my mentorship. Okay, so apart from that, you know that at this point of time with this major displacement, you know that okay, we're bullish. How do we know it's bullish? It's obvious. You can see that it's bullish, right? It reacted off of a higher time frame level, in this case the 4-hour order block and the fair value gap, and we got a major market move to the upside. Okay, we got a major market move to the upside. So for now, we consider this market to be bullish. Okay, moving on. Let's go to the next day. Okay, I think I went too fast. Let's just go a bit back. Okay, so now we approach the next day, right? So now, before starting your day trades in the next day, you're going to be analyzing what's in this price range. Okay, what is in this price range? Pardon me, it's raining outside. Yeah, okay, so you're going to be looking at what's in this price range. Number one, we have fair value gap. Number two, we have bullish order block, right? We have bullish order block. So we also have this propulsion block. Although it's really small, we have a propulsion block. Okay, so these are our higher time frame levels. These are our discount arrays. Okay, now we can have segmented ranges rather than this huge range. We can segment our range based on the lows and highs formed as price goes up. So for all we know, we could use this range from this low to this high as our reference points. So if we use this low to this high as our reference points, we really do not need to care about the fair value gap right here. Okay, we don't need to care about the fair value gap right here. So what can we do? We're going to use this range for now. Okay, we're going to use this range for now. So let's move on to the 15-minute chart execution. And now what you're going to do is you're going to identify your central bank dealer's range. Okay, so now if you want to know what the central bank dealers range is, you have to have access to ICT's mentorship videos, or you could join my mentorship or my weekend live training group, which is only $30 monthly. So I think that would be a better option for you, because you can go to my website and check it out. Okay, so now let's look at the central bank dealers range. So from my time, it's going to be this right here, from here to 9 o'clock right here. All right, let me change the color to this. Right, so now this is the central bank dealers range. If you are aware of how you can use the central bank dealers range, you know that the algorithm loves to start its move or form the low of the day. Now listen carefully, this is where you're going to get your daily bias, right? The algorithm is going to form its low of the day if you are bullish within 1 to 3 standard deviations away from the central bank dealers range. So this is 1 standard deviation, 2 standard deviations, and finally 3 standard deviations. Okay, now you can use the central bank dealers range to project the daily high or low. I'll show you how. Okay, now before I show you how, now look at this, right? Now we started the new day. We have the central bank dealers range standard deviations. Now within these standard deviations need to overlap with a 15-minute or 1 hour discount array. So let's go to the 1 hour discount array. So we have this bullish order block right here, along with the 4 hour order blocks also. Okay, so let's keep this also in mind, this one right here, and see what price does. Okay, so now you can see this is your normal London protraction, right? So price comes down. Let's see where it goes to. Alright, so this 1 hour order block is basically not that valid anymore since price traded through it. So if it traded through it, what are we going to look for? A 15-minute discount array. Alright, a 15-minute discount array. So what do we have? We have bullish order block and fair value gap right here, right? We have a bullish order block and a fair value gap. Okay, so play it forward in time. Alright, now although we had this bullish order block, what did price respect? Price respected the 4 hour time frame order blocks. See, price respected the 4 hour time frame order blocks. Doesn't matter what's over here, doesn't matter what's over there, you will always find your entries keying off of the 4 hour time frame order blocks. So then why did I show you the 15-minute or the 1 hour discount arrays? It's so I can draw a comparison for you to show you that it doesn't matter if there's a 15-minute order block, 15-minute fair value gap above these key levels, because at the end of the day price is going to be drawn to higher time frame levels, because institutions and institutional traders, they work off of the higher time frames, 4 hours and above, right? So we'll just delete this and see, this is your New York Q zone. What are you going to do? You're going to buy. We're going to buy. You know that these are 2 key levels, right? So let's just choose something. Let's just go here, buy it right here, right? Your buy limit is right there. We're going to keep a stop loss below this order block. So round it down. Okay, you got a 6 pip stop loss, and your take profit, where's it going to be? Now here's where you can project the daily high or low. Okay, you take the central bank dealers range, draw it up until the point in which it reacted. Oh, actually, let's see how far it reacted, and then we can be more precise. Alright, right here. Okay, so now you can see that it reacted exactly at this point, right? So right here. So what you're going to do is you're going to put this up on top. Put another one. And this is considered 2 standard deviations. Okay, 2 standard deviations. So then what are you going to do with these 2 standard deviations? Well, you're going to keep it as a profit target. Where? Here or here. Price will post its closing price for the day within these 2 standard deviations. IPDL likes to do it in the second standard deviation, but more or less we get it in between the two, right? Just keep it over here. 110 pips for a risk to reward of 18.35, and let's see what price did. Boom, there you go. And now you see, if you brought your cursor somewhere here, price came exactly over here until the next day's Asian session rather. Okay, this is how you use the central bank dealers range for profit targeting, and this is how you use your central bank dealers range to project your low and your high. You can use the central bank dealers range along with your discount array and premium arrays to accurately identify where the low of the day is going to occur and where the high of the day is going to occur. Okay, again, I use it to identify where the low of the day is going to occur and where the high of the day is going to occur. Alright, so let me just read the question one more time. The question I got that led to me doing this video. The question was, practice to get discount arrays and daily bias in New York Q zone and London Open Q zone. So now you know how you can identify your discount arrays and premium arrays, right? You can use a range, segment that range, identify its premium level and discount level by dividing the range in half and identifying its equilibrium point. Everyone knows that, right? Next, you're gonna annotate these levels on your 4-hour charts and move down to your 15-minute chart, whereby you're gonna annotate your central bank dealers range and wait, right? You're gonna wait until price does its market protraction during the beginning phases of London Open, and you're going to keep your buy or sell limit at that premium or discount array, at the higher time frame premium or discount array. Okay, that is how you're going to get your daily bias. Okay, now another hint I can give you regarding the daily bias is basically in terms of the intraday profiles. Okay, the intraday profiles. You want to see London give you a market protraction. Market protraction means a fake move, right? A fake move such as this. And where is the fake move going towards? It's going towards the high time frame premium or discount array. In this case, the discount array. Alright? So you're going to wait until London does its fake move, and you're going to identify where the fake move is going to happen, and boom, there you go. Place your trade and ride price out with your central bank dealers range projections. Okay, so if you want to know more about this, then I'd suggest you to join my mentorship, or you could join my weekend live training bootcamp. It's $30 monthly, and we cover weekly forecasts, live intermarket analysis, weekly expansion and daily expansion case studies, and I also help everyone in their analysis, their forecasts, and I also give out mini lectures on the content that I use for my mentorship students. Right, so basically it's like a trial version of mentorship. The $30 monthly plan is like a trial version of mentorship. And so yeah, so if you want to know more about this, I have sessions every weekend, Saturday, Sunday, for everyone to basically improve on their trading, improve on their analysis, and all that. Okay, so I hope you guys understood everything that I just spoke about. But I think you'll have trouble with using the central bank dealers range. So for that, I think you should join my at least you should join my weekend training group to get better at doing this. Right, so now you know that whenever you want to find your daily bias, you're going to be seeing where price originated from, where price's original move originated from. You know, now you know that in this case the original move was here, right? It was here, and this displacement caused everything to be bullish. And so what are we going to look for? So what we're going to look for is a range, its premium, its discount. So when we're bullish, what are we going to look for? We're going to look for a discount array. So this bullish order block, this propulsion block. We're going to wait for London, or at least the beginning phases of London, to protract into these levels, from which you're going to place your buy limit and use the central bank dealers range projections to set your profit targets. Now I use these same concepts along with others to promote precision based trading, where you can have stop losses of maybe 5, 4, sometimes even 3 pips depending on your broker. If you have wide spreads, you won't be able to do it, but if you have really tight spreads, like an ECN account, you should be able to get precision trades with stop losses less than 5 or 4 pips. Okay, alright, so I hope everyone got this, and if there's any question to be asked, do ask it down in the comment section. And if you want to join my free Telegram, basically the public chat room of the Trading Academy, you will find a link down below in the description. Go follow me on Instagram at sean.d.y. Again, I'll put all those in the description. And also don't forget to subscribe, like this video, comment, and I'll see you guys in the next one. Good luck and good trading.